I'm Patrick Bailey with whiteboardcoder.com. Today is April 9th, 2015, and today I'm going to talk about choosing mutual funds. This is something that came up recently between my wife and a few friends, and I was just going to explain how I do my own research when I'm choosing mutual funds. Now, I don't own individual stocks. I'm kind of a fan of Dave Ramsey, and I think it's a good idea not to go own individual stocks. I used to many years ago, but individual stocks are too risky and there's too much of a pain in the butt to keep track of it all and to keep on top of it all. It's a little bit easier to keep track and on top of a few mutual funds. I'm going to show you what I do when I'm researching mutual funds. So what I do is I get an Excel spreadsheet here, and let me freeze the panes here so it won't jump around so much. Okay, what I do is I first write down some of the ones that I currently have. So I currently have these. Now these are not recommendations, they're just what I have. Don't go out and buy them. But this is my process. So FL X and TMCGX. So there's 4 of the mutual funds I have. And so what I first do, I should freeze the panes right here, huh? Unfreeze, freeze. There we go. What I first do is I want to see what I currently have so I can balance it against what I might research against. So I'll go look them up. I usually use Morningstar and I use Yahoo Finance sometimes. So I go over here and I did a search on AVPAX. Now in this case I'm not concerned about the minimum investment because I already own it, but I will look at the Morningstar rating. Now the Morningstar rating, they give it 3 stars. So I'll give it 3 stars. Now I don't live and die by the Morningstar rating, but usually it shows the quality of a mutual fund, and I kind of want to, have 3 or more stars. If it has less, I want to do more research on it. But anyway, 3 and a bronze. And then I want to know if it's a load or a no-load mutual fund. A load fund basically says when you buy it, there's a load. So you have to pay a fee when you initially buy it. So if it's a load of 5%, if you spend $1,000 worth of shares, you're going to have to give them 5% of that. So that's $50. So you already lost 5% on the when you originally got it. Now I'm not totally against them, but it is something to write down and consider. So here's this AVPAX, and you can see here the load is none. So I'll write none. Redemption fee. Let me go look that up. Now there can be a redemption fee. So some of them have different rules on when and how you can sell the mutual fund. Some of them have no redemption fee. Some of them have a little redemption fee if you buy and sell it within so many days. Now I don't mind if they have a redemption fee that is 2% for 90 days, and if you sell it after 90 days then there's no redemption fee. I'm fine with things like that, but I want to know. So here you can click on expense, and I think they have it in here. So you scroll down here and there's redemption, and there's no redemption fee. So put a none. Expense ratio. Let me go back to the quote. Now the expense ratio is important. That's how much they charge to manage the mutual fund. And you don't want it to be too high or too low because it can be a little suspect, in my opinion. And here we can see it's I gotta make this a percentage. Here it's 1.16%. There we go. There we go. Fix that. Okay, it's 1.16%. The next thing I look up is the 12B1 fee, and that should be in the expenses too. Now the 12B1, I don't want to misuse the word and say it's a kickback, but it is a kickback to your brokerage or your broker. Now if you have a broker who is helping you pick mutual funds, this is a simple way they can get paid. So they can choose funds that have a 12B1 expense. And what that is if they have a 12B1 of 1%, that's an additional fee to the mutual fund, but that is paid to your mutual fund manager. And it's well worth the while because usually a fund family will have a 12B1 version, And so rather than create some weird complex scheme of how you pay your mutual fund manager, the person who's actually helping you, he'll just collect the 12b1 fee, which is usually 1% or half a percent, or, well, I think it's usually 1%. And so your mutual fund manager is making 1% kickback from the fund itself, and so that's how he's getting paid. And so if he's doing it that way, he may not charge you anything because that's how he's getting paid. Now me, I manage my own, so it makes no sense for me to buy a 12b1 fund or that version of a fund. So here, look down here to the 12b1, and it's 0%. So that's good. Turnover ratio. This is another important thing. If this is a mutual fund in a retirement account, which is my case, you don't need to concern yourself with this. If it's a mutual fund you're buying outside of a retirement account, in other words, an account that can be taxed, then you would care. So let's see if we can find it. Turnover. Okay, there we are. Turnover ratio of 73%. I'll record this just because it's maybe important to someone. To me, this is all in a retirement account, so I don't care. What a turnover ratio indicates, though, is how often is the churn. How often do they buy and sell stocks? So, why you would be concerned with that is if this is a taxable account. Whenever you sell a stock, you have to mark down what profit you made, and then you have to pay capital gains on that. So if they have a turnover ratio that's really high, like this one is fairly high, it's not super high, but it's high enough, you're going to have to pay taxes on this at the end of the year. They'll give you a statement, and based on what profits they made, you have to actually pay taxes. So if you have, ideally, if you're in a taxable account, you'd try to choose a good mutual fund that doesn't have a high turnover ratio. But if you're in a retirement account, you don't care. Then what I do is I pull in the actual numbers. What's this fund doing right now? So I'll go down here and I'll do year to date. And so here's the fund. And so there is, well, I better make these all percentages, huh? There you are. Okay, so year to date, this was returned 3.31. Oh, and I gotta give myself breathing room. There we go. 3.31. And for the 1 year, they have done 7.84. For the 3 year, 16.43. 5 year, 13.08. And 10, 8.39. And if you're not familiar with those, what those numbers mean is that's the actual annualized returns rate. So if I had put money in this fund 10 years ago, it would be as if I had put money in a savings account that had an annual interest rate of 8.39%, compounded annually. For the past 3 years, they've made 16.43% compounded annually. So that actually adds up to more. It's, so in this case, if I had $1,000, the first year I would have $1,083, and then the next year $1,083 times 8.3%. So you'd actually make, I don't know, $95 the next year. It compounds. It all adds up. Okay, so there's that. So I grab those numbers, and then what I'll do is I'll grab the other numbers. So I'll just pause the video here right now, and I'll go grab all these numbers and populate them with the current mutual funds that I have. Oh, before I do that, I did forget something. The type of mutual fund. Now, I like the Dave Ramsey plan where I'm going for long-term growth. I save money I have emergency funds. I save money like that. So if there's any kind of emergency, I don't need to pull money out of my mutual funds. These are in for the long haul. So I want that money to grow in the long haul. So I'm looking for good growth mutual funds. And so what Dave Ramsey recommends is growth in income, and aggressive growth. Now, with that in mind, I don't buy specific sectors. I don't buy Europe. I don't buy steel. I don't buy technology. I just buy growth. And so you can examine a mutual fund and see what they do. So you can look at here, and here's this little map over here. It'll show you what how they're investing. So they're actually looking for small companies. And this one actually is a value play. So I would say it's a small value. Now you can read up more specifically on how they invest, and so you want to make sure when you do more research, what do they invest in? Yeah, are they going for small value and a good growth rate? Are they going for, and small value means small companies, but I don't want them going for small companies that are in the tech sector. I want them to go for small companies because the tech sector may be good this year, but 5 years from now it may not be. But small companies, good small companies, there's always going to be good investments there to be made. Okay, having said that, I'll go fill out the rest of these real quick. Okay, now that I got that filled out, we can see everything I currently have has a 3-star rating or higher. Here's the types I have. I got a small value, a mid-cap value, there's my foreign, and a small company growth. Now I do have one that had a 5% load. I did like the mutual fund, so I kind of bit the bullet and bought that. But typically, there's a lot of good no-load mutual funds out there, so you really shouldn't have to do this very often or at all. Now, like I talked earlier, redemption fees. I do have one of these that has, if you sell it within the first 90 days of owning it, it does have a 1.5% redemption fee. And so that means if I bought it, sold it 30 days later, and I sold $100 worth, I would owe $1.5. So it kind of prevents people from jumping in and out of it, and that's fine by me because I plan on staying in the long haul. And you can see here the expense ratios aren't too bad, 1.6, 0.7. This one does have a 12B1 fee. I probably should have done some more research back when I bought this, but it is what it is right now. Oops, looks like I put these numbers in the wrong place, so let me move them. I can insert. There we go. All right. That looks right. Oh, I didn't add the turnover ratio on these. Let me go add that real quick. Okay, I found them all. Now it looks like TMCGX doesn't have the turnover ratio here for some reason. Can't tell you why. So I had to go look that up, and I found it to be 78%. So it looks like, as far as turnover ratio goes, these two would be pretty good in a taxable account, and these two would not be so good. 78 and 73% turnover rate, not so good in a taxable account. Okay, now that I look at mine, and I look at them all and say, oh, they're looking good, and then I look at their yields. Now I look at their yields. You know, here's year to date, 1 year, etc. And I kind of get a feel for what's going on. So I look at year to date, and you know, I'm pretty happy with my mutual fund. So it looks like, you know, 4% is probably a good number right here, as a minimum. And then a 1 year. My worst is doing 2. My best is 9. So you say maybe you give it a bottom of at least 5. So I'm just trying to figure out what's a good bottom to compare these two. There's that international, which is good and steady, but the other ones have been doing pretty good. So I'll say 11 for that. And the 5 year, things have been going pretty good. I'll put a 12. And the 10 year, well, let's put at least I think we can probably do, well, let's put a 8. So I kind of come up with a number that's kind of my bottom that I want to compare. I don't want to buy worse mutual funds than I currently have. I want to buy equal or better, right? So what I do is I go over to Morningstar and do a search. Let's see where their tool is. I kind of forget. Where are you? May just click on here. Okay, click on funds. And usually you got to log into this. So I'm already logged in. And it's a free account. I don't pay for this. Okay, there it is. Basic Fund Screener. That's what I want. So go to Basic Fund Screener, or you can just go to this website. What is screenmorningstar.com/fund selector. So just go there directly. You may need to log in and create an account, but you don't need to pay for it, not for the basics fund screener, and that's what I'm using. So I'll go down here and I'll go fund groups. I don't need to pick one right now. Category, I won't pick one yet, and don't need one of those. Minimum initial purchase, don't care about that. Load funds, I'll just choose no load funds. And expense ratio, less than or equal to 1.5. And then I'll select, I want at least 3-star Morningstar rating. I don't want new or unrated. I want my mutual fund to have been around 10 years or more so they know what the heck they're doing. Risk, I don't need to mark that right now. So now here's where I start to filter out. So I do year-to-date return, and so I'll use my number I put over here, 4%, 1-year return 5%, 3-year 11, 5, 12, and a 9. And so there's my first filter. I'm not using this tool to find the mutual fund. I'm trying to narrow down my list of possibilities. I want whatever mutual fund I pick to at least be this good, right? And right now I don't care about turnover because this is a non-taxable account, but if you did, you might come down here and choose 25%. Total assets, I'm not concerned about that. Duration, I kind of already have that by default because I chose the 10-year return. Now click on Show Results. And here's my results. Now I've got 200 results to sift through. That's a lot. So I need to figure out how to narrow it down. Now I can start playing with these numbers a little bit, change my lows and highs. And I think I'll do that a little bit. But you don't want to get too extreme with that. Like if I come out here and I try to find one that made 20% in the last 3 years, that could be an anomaly. It could be just something that was, a gold stock or something a few years ago and it made a ton of money, but for the long haul, it may be no good. I don't want to go too high with that. So what I can do here is I'll update my search. Let's see, I click on to go back. Change criteria. Click on change criteria here. Should keep my information good. And I'll go, I'll try to get 10%. So I'll change that. And that 11, that's probably a little low. So let me bump that up to 14. And then I'll show results again. I still got 200 to sift through. So now at this point, it's up to you how you want to start sifting through things and reducing the criteria. I don't want to look at 200 things. I want to look at 20, 15. So I'll go back to the criteria here. But I don't want to play too much with these numbers. You start making these too high, and you might start getting some weird mutual funds that were good for a time but aren't really good for the long haul. So what I'm going to do, this is what I did recently. I looked over here and I said, okay, I've got a small value, a mid cap, and a small growth. So I have, and if you're not familiar with what small, mid, and large, which I don't have listed here, mean, what that means is small is a small company, a mid is a mid-sized company, and a large is a large company according to their stock evaluation, how much the company is worth on paper. So Apple Computer or Exxon would be a large company. A mid-sized company, I don't know what the cutoff ratio is, to be honest. But the tier down from the Exxons, in fact, let me go look up. There's got to be a small versus small, mid, large cap. Go to the internet. They'll probably tell you it right there. There's probably just a number. Investopedia. Everyone's got way too many ads. I bet you if I look up billion, I'll find it. Oh, there you go. Micro cap, which I'm not dealing with, 50 million to 300 million in net worth. Small cap, 300 million to 2 billion. A mid cap, 2 to 10 billion. So at one point in time, Apple was a mid cap. And then they have big cap and mega cap. Okay. I would say big cap and mega cap probably, well, those numbers don't quite seem right, but you get the idea. It's just a different ratio here. Micro cap companies, probably not an area I want to be in. These are smaller companies, maybe regional companies that could become big later on, but not, well, maybe there's some mutual funds that are in that area. But looking where I am right now, if this was all I have a foreign, I have a mid, and I have a small. Now I could buy another small growth mutual fund that could be different, but there's some overlap there. They're for smaller companies. What if bigger companies are doing good? So looking at what I have right now, I don't have a large cap growth mutual fund. Maybe I'll use that to narrow it down. So I'll go over here and I'll choose Morningstar category. So I'll say a large growth. And I'll keep all my other numbers the same and show results. That might be enough to narrow me down. 76. Okay, that kind of got me a little lower. Maybe I can use the 76 is still kind of high. Maybe I'll just bump up. Well, I hesitate to go to the 4-star. Maybe I'll do 10 point. Well, maybe I'll do 15 and 10.5. See if that narrows me down a little more. I mean, you can play with these numbers. Don't go too high though. And I should say I don't go too high, because that can mess me up. Okay, so now I'm down to 37. There's a little more reasonable level. So now what I do, these are my possibles. So now what I do is I go by hand and I start choosing some that look interesting. So I'll just choose one as an example. Here's this Hartford, let's see, Franklin Growth Opportunity. So I'll right click on that, open in a new tab. And I got no idea about this stock, this mutual fund at all. My first time looking at it. So what I'll do is I'll gather the data about it. So I'll put, like that. There we go. So, these are my possible ones. So I'll put that in there. Minimum. Now we probably got to be concerned about minimum investments. Oh yeah, there you go. Minimum investment, $1 million. That is probably not something I'm going to invest in. So that's out of my realm of possibility to begin with. Now some of these do have mutual fund families, so this could be a part of a family. So maybe FRAAC is another version of this that is the same mutual fund but only requires $5,000 or something. But this specific one can't afford. So I'll close that. Say, okay, that already eliminated one. So let me pick another one. Aspen 40, whatever that is. So I'll open that. Let's check my minimum investment. And it looks like it doesn't have a minimum investment. Okay, that's a possibility. So I'll put it in here. And it looks like there is no minimum investment. And I got a 3-star rating. And it is a large growth, which is what I'm looking for in this case. And does it have a load? Nope, it's got no load. A redemption fee. Well, I gotta go click on that. Click on expenses here. And my redemption fee, oops, looks like none. And let me go back here. Okay, expense ratio 0.57, kind of low. 12B1. Wait, I didn't see that. Was there a 12B1 on there? I should have checked. Speaking of, I need to fix that. 12B1. Nope, no 12B1. Turnover ratio. Turnover ratio is 46%. Now in my case, like I said, I don't care. because it's all in retirement accounts that aren't taxed. Now let's look at what they've done. So year to date, 9.36. 1 year, 25.35. I guess it's been a good year for growth. 17.41, 12.97, and 10.51. Okay, so I'll just mark those as special somehow. Okay, so the numbers look better than what I have currently, so that's encouraging. So that's what I do. Now I'm not going to go through and list a bunch of them, but what I would do is I'd probably get 4 or 5 possibilities here that are possible by the numbers. Now that I got 4 or 5 that look good by the numbers, then I got to figure out, are they good based on other factors. Now I need to dig in deeper, but now I don't have to dig in deep on 50 of them. I need to dig in deep on 5 that look good on the surface. And then I would look over things like, how many stars do they have? That's a factor. If there is a load, that's a big factor for me, but we filtered up based on that. And then I would go in and do more research about what the company is. So I like to go to Yahoo for that sometimes. So I would go to that company. Let me search for JACAX. And then I would start, what's their profile? And they have that information on Morningstar too, but for some reason I like the way Yahoo presents it. And so I can go, okay, it's a Janus fund, and Janus is a big company. They have net assets of almost $1 billion, pretty good. They've got a good rating. They've been around since 1997. That's a good number of years. And then you could start digging into nitty-gritty here and see who's managing it. What are they actually trying to invest in? So like this fund, investment seeks long-term growth of capital. The portfolio pursues investments by da-da-da. So you just read the details, and does it make sense to you? Are they doing what you want and what you're looking for? Another thing that I would do is I can go here to the holdings, and this shows their current holdings, the top 10 holdings, I should say. And in this case, their top 10 holdings contain 40% of their current assets, which may be good, may be bad. But you can look at these companies they own. Here's they own Google, and you may look at these companies and go, yeah, this seems like a good investment. You could see, are they diversified across sectors? Where all their money is? Are they in government bonds? Or are they just in? So you can get more and more details. You can even click here and get the current quotes for the top 10. So that's how I do it. So I get all that information. I get myself narrowed down to 5 or 6 based on the numbers, and then I have to dig down, because those numbers, they might look good because maybe they just invested all their money in Apple and they got lucky, and you don't want them to invest all their money in Apple. So you have to, after that, you do the research, you do the deeper research, but now you only have to do the research on 4 or 5. Anyway, that's the way I research mutual funds. Now, these mutual funds I have listed here, I'm in no way endorsing them. I'm not saying out to go out and buy them. These ones are ones I actually currently have, and these are ones we just looked and researched on. I like these, but they may be the wrong thing for you. You may research them and not like what they're investing in. Whenever you're investing in mutual funds, you need to invest for the long haul. So these, I guarantee you, one of these years, these are going to lose 30-40%. In fact, here I'll show you. I'll go to AV, I'll go to here, and they show you the information on here. You can go to Yahoo, and you can go to performance. And that gives you the information, but then they show you year by year. So in 2008, this fund lost 32%. But it got it right back the next year, and the year after that, they were up. Now, I know if you lose 32% and you make 32% the next year, it doesn't balance out to 0. I know that. I'm just showing this because, hey, if next year this fund could be down 40%, that happens. But over the long haul, I think it's done pretty well. And you have to make your decisions based on their history, based on their management, based on where they're investing their money is, and try to make a good informed decision. But I just wanted to show you how I did it, how I narrow down my list before I do my heavier research. Hope that helps somebody.